How to find breakout setups? In order to find breakout setups, there are two scans which I've shared multiple times. One is a 4% breakout scan, the other one is a dollar breakout scan. These are the two basic scans which are used during the day to find setups. So if you run a 4% breakout scan which looks for a stock which are up 4% plus, and volume is greater than yesterday and volume is greater than 100,000, you will see that there are 106 stocks which are meeting that condition today. And if you run the dollar breakout scan, which looks for a stock which is up 90 cents plus from the opening price with volume of 100,000, you will find there are 276 candidates. Once you have these candidates, and this candidate will start coming into your scan immediately as soon as the market opens. Some of the stocks will show up in the first 5 minutes, 10 minutes. Obviously, the one which shows up early in the morning, if you can get into that, if you know which one is the better one, and if you get into that, you're going to benefit because the stock might keep on going up during the day or going down if it is a bearish thing, and then you'll benefit from that thing. So how do you select the best stock to look at, or which stock should you be buying out of these scans, because you have like a lot of stocks? So in order to do that, the first thing which I do, which is like, this is more an end of day process rather than a during the day, is I'm going to copy all of these symbols into one list, which is a bullish working list, because there is a commonality. Some stocks might be common between those two scans. So once we have these, now what we are looking at is we are looking for a particular kind of a setup, which is a good setup. And in order to find that good setup, I shared in the bootcamp an acronym 3 Lynch. Okay, so 3 Lynch is the acronym which you need to remember if you're looking for 4% breakout and dollar breakouts. What does 3 Lynch means? 3 Lynch, the first 3 means stock should not be up 3 days in a row. So let's look at, say, this is a stock which I bought yesterday. No, not on yesterday, on Friday. Now stock was not up 3 days in a row. Okay, so that's like one of the first conditions of 3 Lynch. Second is linear. Linear means the stock in its first leg, this is the first leg, was going up smoothly. Or if you look at any other stocks, which is like, say, if you look at, say, Home, which is another stock which was highlighted as possible thing. Here is like the stock's first leg move. So how smooth is the leg move? And you want to trade stocks which are like basically going up linearly, or they are very having very smooth uptrend, versus stocks which are very volatile, because volatile stocks require larger stops. And as a conscious decision or as a choice, I have made a decision to only trade stocks which are very, very linear, which like move up in a very orderly fashion, as against stocks which are very, very volatile. Can you make money trading volatile thing? Yes, you can make money trading volatile thing, but you need larger stops. So in order to avoid larger stops, I'm looking at things which are linear. So when you look at 3 Lynch, you're looking at something which is linear. The next is young. Young means like basically you're looking for something which is not extended trend, a trend which has been just started. If you can get into a 4% breakout, obviously you can hold it for a longer period of time, and that is true of dollar breakout also. Next is no 4% breakdown during the consolidation. So if you're looking for, say, any stock and looking at how it has behaved during the consolidation, say now like this stock, if you're looking at buying as a 4% breakout here, obviously it didn't close near the high, but like it had two breakdowns. So that's not the kind of stock which you want to see. You want a stock which doesn't have 4% breakdown, at best only 4% breakdown during the correction. Now what is an ideal pattern? Ideal pattern is like this. See, this is what is called as a very linear trend. This is the first leg of the trend. The stock was not up. This was like a first day of the breakout. Okay, stock didn't have 4% breakdown during this particular move. And if you look at it, like a volume was low during this entire move. So that's the kind of setup which you're looking for in 4% breakout on this particular day. Okay, so that's the no 4% breakdown during the consolidation. So you don't want 4% breakdown. Ideally you don't want even 4% breakdown, but up to 1 can be okay. So that's like for the N. And C is the quality of the consolidation. You want an orderly consolidation. You want a consolidation which is very shallow, in the sense that consolidation doesn't take the stock too far from its recent high. And you want a consolidation where the volume is low during the consolidation. You don't want a consolidation where the volume is high. So that is the three Lynch criteria. The last criteria high, the stock should close near the high. And in this case, like the stock didn't really close near the high. But this is what is going to happen when you enter these stocks intraday. The stock might be basically near the high, and later it might end up giving up the gains. But at whatever time you're buying, the stock should be near high. So remember this particular three Lynch, which is basically not up 3 days in a row, linear, smooth trend, young trend, no 4% breakdown, quality of consolidation, and closes near high. So if you apply those conditions to these stocks which are showing up in the scan today, now once you have these things, what I do is I sort it by the dollar, and dollar is basically that way you can get rid of like in a lower price stocks, or look at like in a lower so C minus O, this column is C minus O, or close minus open. So now you have like together 355 candidates to look at for a possible good breakout candidate, and let's go through them one by one and see which one is a better candidate. Obviously this was a breakout yesterday, is up 2 days in a row, and these stocks, because they have a negative value, that tells you that they are not close near the high, so anyway they get eliminated. So let's keep going till we find better candidates. All these stocks, they close lower than when they open, so they are not the one. Now obviously you're going to get a lot of these low price stock. Now this video, when I make it for like everybody, and there are people who want to trade lower price stocks and all. That's why I don't like put conditions. But in the one which I use for my own personal trading, I have a condition which eliminates all stocks which are not up 25 cents. So that way all these stocks I don't really spend time on. So let's keep going, and let's look at. So now like something like this is up 8 cents, but like the quality of consolidation, there is no first leg, so orderliness. So those are some of the things which you have to look at. So now here, if you look at this AUPH, but like the first leg is not very linear. It has been like, and I see you had this big drop in here. Otherwise this leg looked like linear, so I would let it go. Now here is a stock which like, and I didn't close near the high. Again, the base was so choppy, it had two breakdowns in the break. Okay, VNRX, a lot of stocks didn't close near the high because the market itself faded. But again, like see the quality of the consolidation is not really, you want a very shallow consolidation. Stock should remain like this. This is the kind of setup which you want, basically, not this where like it has a longer pullback. Okay. Now yeah, EBR, now this is a Brazilian stock, because they are ADRs, they will have a lot of these gaps, but this may be considered because of the way the ADRs trade. It is going to have gaps because of the market difference between opening in Brazilian market and our market. The stock tends to have these ADRs tends to have these kind of gaps, but that's a good setup. Now here is a very good setup. Like look at everything. Like this is the first it is not up 3 days in a row. So your condition 3 Lynch, it's not up 3 days in a row. So take the box. Linearity. Linearity is the first leg of the move. Look at the linearity. It is very linear. It went up very well. The stock actually like had very orderly up move of around 110% or 113% during the first leg, and that satisfies your young. And now if you look at young, basically it's not a very old, this is the first consolidation which is happening after the trend has been established, so this is also in its favor. Okay, what is the next thing you're looking for? You're looking for no 4% breakdown. Obviously there is no 4% breakdown in this consolidation. So then you're looking for quality of the consolidation. The consolidation was orderly. If you see like the consolidation also wasn't deep, like the stock remained within 5% of its recent high. So it was a very shallow kind of a consolidation or a bull flag kind of a thing. Volume was a little bit like up down during this consolidation, but stock close near the high, which is again one of your condition, which is like stock close near the high. So all conditions are met. It ticks all the boxes. So that's a nice setup which you found one setup. Now obviously if you know all these things, you would have found this stock earlier also during the day, because the stock is up 11%. So when it was up less also you could have found the stock. Now here in this case the stock is up 2 days in a row, so that's not a good condition. Petro Brazil again, it faded, like stock is up at almost like there was like very small consolidation. So let's keep looking at again same problem here. Fate Therapeutic, this is like on Friday, this would have been, there was a one down day in that basically. And once you become good at it, you can go with speed. Like here again, like see first leg of the first thing, not up 3 days in a row, so that is like a 3 Lynch, the condition 3 Lynch, first condition is met. Okay, linear first new leg of the move, this was a very linear move, so that's again the condition is met. Second is young, so this is the first consolidation after this move, or like after the recent move, so it's not a very old, and also dark green tells you that it's a young. Okay, the other thing is like no 4% breakdown during this consolidation. Quality of consolidation was also good, like the stock was within 10% of its high and closed near the high, so all conditions are met. And you have Corey, that's another stock which is a buy candidate from this scan. AVH again, like in a stock is not really, there's not enough consolidation, patchy consolidation, didn't close near the high, so it doesn't meet your conditions. Again, stock is like already, there's not enough consolidation, or there's no consolidation as such for this particular stock. Kazans Limited. So there is one 4% breakdown, is that's a negative. The first leg was linear, a little bit patchy in terms of the consolidation here, but it wasn't up 3 days in a row, close near high, so that's another one which you have as a candidate. Okay, and always remember, this is in order to make more money out of this method. If you are a full-time trader, the best way to do this is during the day. Okay, now again noodles. Okay, so it's like this consolidation is too patchy, like, and it has like, and if it was just this orderly, then it would have been good, but like too volatile a consolidation, even though it looks like a nice setup, I would let it go because of consolidation. And this leg also was like deeper pullbacks, so can it work? Yes, possible, but like, and I would let it go, because we have choice, we have so much choice when you run these kind of things, so like you get a lot more candidate than you can always buy any day. Okay, and now obviously all these kind of things are like 3 days in a row, 4 days in a row, stock is up, so that's not a good setup. That stock is also up like 4 days, or almost, it's an IPO. Now that's a buyout, so and see, once you know what to look for, you can really like rapidly go through this list. It doesn't take me more than 10 minutes to go through the list, and multiple times during the day you would have gone through this list also if you're trading this kind of setups, which is like basically because this stock start showing up early in the morning itself. Okay, so you don't have much to look at as of now, only the couple of lower priced kind of setups which showed up. All these are like, for variety of reasons, they are not good setups, means they don't meet your conditions of that 3 Lynch basically. Momo, it's only 2 days of consolidation, and also look at the first leg is so patchy, and the consolidation here 2 down days, so I'm not going to look at something like that. Okay, you see a lot of fades actually, so this is just 2 days of sideways, and also look at like this big drop here, so Now this is a nice setup. Why? Because see, very linear first leg, small consolidation, quality of consolidation is good, not up 3 days in a row, and breaking out and closing near the high. Okay. Carvo again, like see choppy base, there's a 4% breakdown here. Like the first leg is not very linear. It might work, but like doesn't inspire confidence. See, as a choice, yeah, you can decide to trade only linear stock and not get into choppy things. The advantage of that is that your stops will be closer, and second is that you'll not have too many drawdowns. Okay, so this is okay kind of a thing. See, a little bit like it's a thinly traded stock. Only 131,000 shares were traded. So now DQ again, you'll see that there are like basically multiple 4% breakdown, and it's choppy trend. It became choppy earlier. It was like more linear. It became choppy. So I would let it go. Soxel, Google, Priceline, Chipotle, and Amazon. So once having gone through this, like what you see is basically this is your short list of candidate. Like obviously, the best entries on these are always intraday, because that's when like when they start breaking out. But something like this still can be a buy because it's up only for 4.66%. Like your CZZ, it's see now second time when you look at it, you look at like there's a negative this thing. It looks like a very choppy brace, so I would let it go. This is an ideal candidate, like a big catalyst here on earnings, went sideways, and linear trend here. So that's one. This is a slightly problematic in the sense it's too thin. It did make a move here. So those are the candidate which you have. Okay. So once you have this method mastered in terms of like what to look for, and what to look for is very easy if you can remember this three Lynch, which is not up 3 days in a row, linear, young, no 4% breakdown, quality of consolidation, and high, close near high. It's not very difficult to find this candidate in real time and enter them. So that's like you have these 4-5 candidates which are there from the bullish side. Now you can do the same thing on the bearish side to look for a candidate. In order to do that, what we do is we go into bearish thing and look for bearish side of this scan, which is like basically stock which are down 90 cents plus. Okay. And if you see, like I have one more condition in that, which is like a minimum V 3.1 is also should be greater than 300,000, because I found that it is very difficult to get stocks to short which are thinly traded. So I always look for a higher liquidity condition than that. And then there is a 4% breakdown, for which the scan is, as you know, C by C1 is less than 0.96%. And then we take all the candidates from this and put it into a bearish working condition. And when we are looking for a bearish setup, we're looking for similar kind of a thing. Now obviously this is sorted by the dollar break. Again, like something like this has gapped down and recovered, so that's not a good candidate. Similarly this, so we can quickly remove this. In same way as I said on 4% breakdown, if you don't want these kind of candidate to show up in your setup, in your scans, then like adjust your filters and make filter of like it should be down 25 cents or 30 cents, so that you don't have to go through all these stocks. But I just run them in a pure form for these videos for my personal trading. Obviously, I have filters which don't get me these kind of stocks in my setups. So we have 319 stocks to look at basically, and let's look at them to see if there is a good short setup. Okay, now see, a lot of time when you get this kind of consolidation out of that shorts, they are like, and here there is the volume wasn't really very high here, so that's the negative on this one. But like, and again, stock is not up, so that's possible. Okay. And many times you'll find on charts like they don't close near the low. So this, now this is breaking down from this thing. The down move, earnings is on 221. So obviously that is one of the negatives. Otherwise this would have been a good setup. Okay. Uh, yeah. For a lower price kind of a stock, this is a nice setup. It can have a follow through. I don't really short those kind of stocks at such a low price. Like my shorts, most of my shorts are priced above at least $15-20, or like ideally $30 to $40. But I'm just showing some of these for those who like lower price stocks to or trade in lower price stocks. Now here again, SPKE, this can work. It's an utility, so Chico's fashion. And in when shorting like stocks near the high, you make better short candidate than near low, because there are a lot of deep buyers or people who are like value investors or people who will like, so they will buy near 52-week low. So when a stock is breaking down, not necessarily it follows through. In fact, and it can bounce back very hard. This is again like a stock is breaking down here. So I like stocks which are like just breaking down. Now this is a good candidate. Obviously it's down 11%, so risk reward becomes a problem on some of these. But SFS, that's another one which is breaking down. See 2-3 breakdowns here in a row. Altria, see this is very choppy basically, but like that's the nature of down moves most of the time. So this can have, now again, this is what happens on many of these stocks is like, especially the large stocks, they start breaking down and then buyers can come in and like pick them up because of this. The market itself has up tendency, so that's why I like something which is breaking down from the top. See, this is the earnings is 228. The stock has had this breakdown, so maybe kind of a thing. And when you look at these breakdowns, you will see that lot of stocks, if you had run an anticipation scan on Friday, you could see a lot of stocks had very negative or like a bearish kind of, there were a lot more bearish candidate in the anticipation setups, and many of them had breakdowns today. Breakdown means like at least they had something like this is like this kind of bearish flags, they tend to break down, and you had a lot of them breaking down yesterday, today. See again, like this was a anticipation setup, and $3 it had a follow through. May work, but I would have liked a higher volume on that. Clorox. See, Walmart had a big drop again, like something like this, unless you short very early in the morning. Um, but that was a nice setup, basically down 10%. ENTA, which was one of the anticipation setup discussed during the boot camp. This is biotechnology, otherwise that was a very nice anticipation setup. Little thin. Union Pacific should have a follow through according to me. Again, a bearish setup here was up 0.38, less than like 0.40%. Adams Pharmaceutical, again, this is healthcare sector. Many of these stocks will have a follow through. Little bit of risk in the biotechnology sector, especially shorting, because sometimes they can have a news and then they can gap up 100%, 200%. Again, this is a continuation kind of a thing. See, down move, weak rally of 2 to 3 days, was setting up nicely as a this thing anticipation short probably, and then like went down today. So charter regeneration. So these are some of the candidates which you have in terms of like shorting: TXMD, RVLT, low priced, Spark Peoples, SBU, Core, GCI, SFS, then Mo, then LB, then FedEx, Clorox, Walmart, ENTA, Union Pacific, ADMS, and Works. A lot of time you'll find that shorts work only if the overall market is also going down. So but like here is your choice of setups after running this kind of scans, okay, which is breakout kind of a thing, which is TXMD, then your RVLT, SPQ, Core, SFS, MO, leading brand, Clorox, WMT, then ENTA, Union Pacific, ADMS, WEX, Cori on the long side, LGCOI on the long side, Cozans on the long side, FTNW, and Word. So this is how you can find candidate using breakout scans. And for best results, I would again repeat, for best results you should be running this scan early in the morning, and then as and when the candidates show up, immediately buy them, because that way you will benefit by the stock. Like this stock is up 7%, and when was it highlighted? Early in the morning, highlighted as like possible breakout. So that's like basically, and also like if you do a good job of anticipation, many of the stocks you would find in your anticipation scan before they break out, and you would probably have orders ready for them. So but even if you don't have orders ready for all the stocks, some of them you will have, some of them will not, still you can use the breakout methods to find candidates which are going to make move. As you saw, this is something which was like a breakout, not this, but like say the the FBR. This I bought later in the day. I didn't had it on my anticipation scan watch list, and I bought it later, and still it worked, and it gapped up and it worked. So a good setup is going to work. So focus on finding the best setups which you can, and focus on finding only the A quality setup. And in order to find A quality setup, use these guidelines, 3 Lynch, which is stock not up 3 days in a row. If a stock is up 3 days in a row, you don't need to look at rest of the criteria. Same way, if it is not up 3 days in a row, then if you look at the next thing, which is like in a linear, if it is not linear, you don't need to look at rest of the criteria. Young, no 4% breakdown, quality of consolidation should be very compact consolidation, shallow consolidation with not volume, low volume, and should close near the high. So this is the importance in which you should be looking at these criteria, like if all these criteria are there, and if it doesn't really close exactly near high, but it like a little bit, you might still consider it. But if this condition is not true, it should not be considered. Same way like this. So these are organized more or less in the importance in which you should be using them. So hopefully this should give you a good guideline as to finding this candidate. The best way to do this is to set up all your scans and do it. Now during the bootcamp, I shared a couple of scans like for intraday use. I shared this scan for intraday use. Basically what I do is for intraday, especially in the morning, you want to find 4% candidate early. Then I use a scan which is stocks which are up 2% or down 2%. And the volume is 75% of yesterday's volume. So that way you're not waiting for V by V1 to be true. If you find a candidate early, this scan is useful in the first 30 minutes of the market open, and volume is greater than 70,000. And see, you can make this like in a 3 or 5, whatever you want basically. So if you use that scan in the morning, you'll find them very fast. Same way, in order to instead of running 2 different dollar breakout scans, I just run one scan in the morning to find candidate which is C minus O is greater than 0.90 or O minus C is greater than 90. So that way both bullish and bearish show up in one scan only. This is more procedural thing. I spent a lot of time in the bootcamp saying that you need to process, well thought out process, and these are more procedurally, so that you don't have to like toggle between 4 scans. You just have 2 scans to run in the morning. So hopefully this will help you find the 4% breakout and dollar breakout setups during the day and enter them and make money. And remember 3 Lynch. That's really the acronym which you need to remember if you're going to be trading 4% or dollar breakouts.